Welcome to this week's CEO1440 Show, the Mortgage Broker Builder Show, where we talk about all things mortgage, real estate, lead by today, all kinds of things. And our goal here is to help you maximize your 1,440 minutes every single day, hopefully to either make more money, enjoy it a little bit more, but whatever it is, that's why we're here. Got a very interesting guest today. I've had the opportunity of knowing him now for a couple of years, and his name is Ethan Ewing. Not at all related to JR or Bobby Ewing, I don't think. I'm going to ask him about that. You do look a little bit like JR Ewing, and that's dating us as far as the age. And founder of a company, ProPair, has been in the lead game for a lot of years. And we're going to talk about credit triggers, leads, the market, mortgage, kind of all kinds of things in and around leads and how you can do them more productively. So, Ethan, welcome.
It's awesome to be with you, John. I appreciate it. And yeah, looking forward to talking some marketing, some lead stuff. That's my background. So I look forward to digging in and see if we can find some nuggets for some of your listeners for sure.
Yeah, well, and let me just tell you, so my listeners are kind of a wide range of people, a lot of mortgage brokers, individual, salespeople out there, but also we've got everything from the C-suite to the trash collectors out there, but very mortgage specific. So touch whatever you want, wherever you'd want to go. And I think that the one thing that is pretty consistent is people are aspiring to try and do a little bit more. So it might be the little guy that just started his brokerage a year ago, but they have aspirations of maybe using you in a year and a half.
Yep, that's
so
awesome.
I would say it's wide open. So let's just kind of kick it off. I kind of first heard about you. You were with Bills.com. It's kind of like where the introduction is. You're now with ProPair. So just kind of walk us through time. How'd you get started in the mortgage space? I know nobody goes to college to do it. How'd you get here? Where are you at today? What you doing? And how do you kind of serve the industry?
So great question. So thank you. I actually sold my first loan in 1992. So I was a loan broker way back when, in the early subprime days, Alt-A days, whatever we want to call it. I think Amresco was ultimately ended up owning that loan, if that name triggers anybody. I ran an origination shop after college. I did not go to college to originate loans. For 3 years, I ran an origination shop, had a $5 million warehouse line. It was me, another producer, and a processor. And it was an awesome business. It allowed me to buy my house, my first house in Maryland, where I grew up. And I remember I went down, I was licensed in Florida, and I'll never forget going down to licensing class, and I had this great instructor, and it was actually a family business. She was instructing, she had her sons instructing. But the one takeaway from that, outside of all the crazy regulations, and at the time there weren't that many relative to what there are now, but was that, she said, hey, you can always make a living selling loans. And always stuck with me, because it's one of those things. I've started this business 9 years ago, started another business for a couple of guys prior to that. So I've been in more of this software and marketing environment of entrepreneurs and starting businesses. But you always know, hey, I can always go back and sell loans. And you and I were talking earlier about, hey, do you still originate loans? The ability to originate a mortgage loan and to be a trusted confidant or a trusted advisor for homeowners who literally are going through, for 99% of us, the most stressful process financially of their lives. I've bought 4 homes, and every single time the stress has not gotten less. It's very stressful. You're putting a lot of money out there. So to be able to do that is, I think, a unique characteristic for loan officers. And yeah, you don't go to college for it, you don't go to school for it. But I think from an empathy perspective and from a human perspective, and these are some things we'll maybe talk about a little bit more today, those skills about getting people comfortable making that decision are things that has stayed with me, from my loan broker days all the way up through now. So anyhow, so I transitioned, ended up moving out in 2000, moved out to the Bay Area, took a job with an online mortgage company at the time, which ended up failing spectacularly, lost hundreds of millions of dollars, and was awesome and super fun for about 6 months. And then I was fortunate to catch on. Actually, that was summer of 2000, and it was a really tough time out here in the Bay Area where I live now, because just jobs were gone. I mean, that was the dot-com bust in March. It happened, and I was fortunate to get on with a company that ended up getting bought by Experian, and that little pocket of 3 years. 3 to 4 years, I was doing a lot of online business development partnerships with Yahoo, with E-Trade, with AOL. We were doing these great big deals with lots of super profitable for us, profitable for them, at a time when inventory was very suppressed and media was very cheap. So we found a really nice niche in that time, and I just managed to make some great contacts in that period, and came out of that in 2004. Started my first lead generation business for AmeriQuest Mortgage, and then a couple years later, moved up to the Bay Area and started a company for two guys that own the business called Bills.com, which is a big lead generation business. I did that for 10 years, and there we're spending $5-6 million bucks a month on media, so a lot of experience buying media, turning those into leads, selling those into lead buyers, brokers, big banks, big lenders, the whole deal. And the interesting takeaway for me in that 10 years was, one, you know how to buy media. Buying media is a thing, and is a skill set. But two, then the challenge from our buyers' side was always that they kind of treated everything pretty much the same. So every lead that came into their system, and I think that's just kind of instinct, is you just kind of treat it the same. And from our perspective, we knew that those leads were not all equal, and that different lenders had a different chance to close different types of loans and different types of leads. And so that's when we started ProPair back in 2016, on the premise that, hey, if you're buying a whole bunch of leads, you're generating a whole bunch of media into your sales team, or even for yourself, rather than just treating every lead the same, you can use predictions to determine which leads to prioritize, which leads are more or less likely to focus, which leads you should assign to which agents on your team, which leads you might want to continue to nurture over time, which leads you might want to call, which leads you might want to email. And that's led us into this larger world of just adding predictions to pretty much any step of the sales process. You can start to predict outcomes and then use those predictions to then execute the decision, whether that's a lead assignment, lead prioritization, lead nurturing, how often you're going to call them, if you're going to send them a direct mail, that whole thing. So very long story of my background, but that's
yeah, no, I've got like 3 or 4 things there that I kind of gleaned out of what you were saying. Thing number one that I think is just really interesting as I hear that, and people have been out struggling, figuring things out, worried about what's going to happen with AI. You mentioned really 2 or 3 things that I just pulled away. Thing number one, once you know how to sell, you can always make money, right? So like whether it's selling a loan, there's always something to sell. So that's a sale, a skill. I actually learned to sell, believe it or not, when I go back in hindsight. Around 12 years old, there was a military base. We would go out and we would boot shine. So you were selling shoe shines to, people. And then I taught, hundreds of ski lessons. And you had to sell people on, paying you for private ski lessons. So and then move into the next thing. So everything's about sales. You mentioned kind of the dot-com bubble, the crash, and you ended up acquiring a bunch of skills. So if you can sell, when you're in the crash or in the downtime, acquire skills. You said media buying. You figured out, probably banner display ads and all these skills. You've now taken that sales and those skills and have parlayed it now into, it's 30 years later, you're still doing it, but it's our sales and our skills that predict the outcome, nothing else.
Yeah.
Right. And those are things that you can continue.
That's it. And I think the relationships along the way, right? Like that's the part, you're accumulating skills, but skills age out, right? You're accumulating grit, like you said, like when you're shining shoes, like that's grit. That's not sales skills. That's just grit. That's like just staying with it and being good with no's and all that other stuff.
Hey, John here, not trying to sell you anything, coming at you with a bunch of hot commission breath. But what this is an FYI, letting you know that we do have a community where we have shared hundreds of posts, hundreds of sales scripts, techniques, tactics, different things to help you grow your business and maximize your 1,440 minutes every day. I'm not sure if it's for you, but it definitely could be for you. So go in there and check it out. CEO1440.com will take you to a place. You can join our free group, give it a sniff test. If you like it, awesome. We've got a lot of other things. We probably would like to sell you something, but right now that's our gift to you. Get in there, check it out. CEO1440 will take you to a place where you can sign up to be part of our free group. Enjoy the rest of the show.
But then
I was 12. I wanted chewing tobacco and, a Playboy, right? You were doing it for all kinds of reasons. It was just fun to be out there in the mix. But that's really interesting. Fast forward to what you're doing, with ProPair, and a lot of the stuff I talk about, and if you go back, heck, 2016, 2015, there were like CRMs were not even super dialed in, right? It was like very clunky, and now it's become super dialed in. One of the things that I talk to brokers all the time about, and I know you're kind of like brokers on steroids, like level 5, but individual brokers that I talk to all the time that have very broken processes. And I'd love to just, you go in and dissect this for large companies, but I talk to them about the importance of having one front door. Like when somebody comes to my house for a birthday party, everybody gets routed in the front door. My wife tells me exactly what I need to do. John, now when they show up, you meet them at the door, you get their coats, make sure they have a drink, and take them into here. Like, I have one job. Well, like, leads come in your system. I don't put the kids with the old people. I got to take the kid to the basement. I need to know where to place them. So you have like this thing that happens that's standardized. Imagine if nobody checked the door and they just came in. You'd have some people with shoes on, some people all over. There'd be coats, like your house would be chaos. Yet I see it on the broker side a lot. They have zero process, right? They get leads from WhatsApp. They get leads coming in 16 different front doors, and then they're all over the place, and then they want to know why they can't scale or why they can't convert. Well, it's because you can't convert, traffic in your house if people are climbing in the windows. Looks like Animal House. So, and I know you guys do a really good job of that. So it'd maybe like to just hear kind of like ProPair. I would say what you guys do is you optimize. If somebody's out buying leads on scale, what you really do is you sort, prioritize, and optimize. You help them get the max conversion out of those leads. Is that kind of like a good analogy, like a good definition of what you do?
Yeah, nice way to think about the benefit for sure. But teeing off what you're talking about data organization, right? Because we have the benefit. Our customers typically are anywhere from 20 or so centralized sales agents, loan officers, bankers, up to a few hundred. And typically in those shops, they have the data organization is done for them, right? So for us to come in, we then will take their data, we'll use 3, 6, 12, 24 months of historical data, and we'll build them custom models to tell them now which of their new leads coming in are most likely to convert, maybe least likely to convert, they shouldn't spend time on, they should spend time on, which of their team, which of those 20 or 30 or 100 or 200 sales agents should get which lead, so you can actually match a new lead to one of the sales agents based on what they've historically done. It's a recommendation engine for each sales agent. But like at the core of that is, like you said, is like organized data. And so if you're a small broker, if you're a one-person shop, it is kind of overwhelming, right? Because you get a phone call from a friend, you get an email from another friend, you get a note on TikTok, whatever it is, it's coming in, and you've now got 3 new leads. They've all come from different spots, and like taking the time to put those into a CRM and to put those into your lead management system, like that's where the friction is. That is kind of hard to do. Yet the flip of that is, as people like us that have been around for a while say all the time to people that are out producing, that's pretty key to do. So even though that's hard, when something is hard and it is advised to do it, that's usually the thing that you want to do. The reason that matters is now if you have those 3 leads, now that they're in your CRM and you take time to keystroke in those 3 records, you've got their name, you've got their email, you've got their referral source, when they came to you, and then now within your CRM, now you're cooking with gas, right? Because now they're in your CRM. And now, if you're using the technology that's available today, you're tracking your emails, you're tracking your texts, you're recording your calls with those prospects. Now, so that's one day. So expand that out to 280 work days, okay? And now a year later, you've got 750 of those lead records, and you've got call logs, activity logs, text logs, behavior logs with all of those customers. And maybe you close out of those 30. You now have a dependent variable. You can now, a year later, you can build a model to tell you, give you the signals for when a new lead comes in, you can determine, hey, I am 80% likely to convert this lead. I am 5% likely to convert this lead. with that, just that little amount of data and that dependent variable. You can do that as a small shop, and that would make a significant impact in your business. But like back to your point, it starts with the data organization, the basic, that data infrastructure.
Bill Emerson, I spent a lot of years at what is now Rocket, and Bill Emerson used to say, I'll probably mess this up a little bit, but I wrote it down here. What's easy in the beginning, what's easy to live with in the beginning is difficult to live with in the end. But what's hard in the beginning is easy to live with in the end. And, as these things are really hodgepodge and you don't even realize how much business you're losing until you can sit back and understand your metrics. And I'm always blown away when, I sit down with somebody, especially if they're doing lead buy, and I've done, I myself have never worked in a lead gen stuff on your end, but I've literally bought, I've had $250,000 on my own American Express on lead buys, running a brokerage. Like I had to pay off 125 on the 15th of the month to buy my next 100,000 of leads, right? And you're just rolling through hundreds of thousands of dollars on your American Express. People think it's crazy when I tell them that, like, oh no, my American, I could have 300 grand go through on my American Express in a month.
Yeah.
They're like, really?
Yeah.
Like, yeah. I know when the market moves the other way and you lose 75 grand, you can do it really fast if you don't understand. But that's something that's really interesting. I have a picture that I share with people that's a front door, and it's got 4 segments, and the buckets are this: now, right? So if somebody comes in, you move it to now, you take certain actions. Not now, you take different actions. Nurture, you take different actions. Or not sure, right? You just don't know where to place them. You have to take different actions. And I see so many people, especially on the broker side, they get all hung up on this. I'd love to hear your take on this. They get all hung up on this verified pre-approval. So let's say you and I are talking about doing a purchase, and they're going to badger the shit out of you until you send them your paycheck stubs. And you're like, I've bought 4 houses. I can buy it cash. Me getting qualified is for you. It's a benefit for you. It's of zero benefit for me. And they badger the shit out of these clients, and they lose all the 700 FICO with 780 FICO with 20% down. They just don't do that client because they want to give you a verified approval. And I tell them, dump that. It's great for the person with a 580 FICO trying to scrape together 3%. Do you guys glean stuff out like that? Hey, maybe you don't want to push this client and just stay in their inbox because they already know they can qualify. Can you pull that out of your data? Is that stuff you guys see as well?
Yeah, for sure. See, that initial right there of hey, a certain type of prospect in a, maybe call it a rate shopper, the higher end credit customer who kind of knows they just want to get through a transaction. That type of person relative to the other bar you described, which is, hey, they're gonna need some help, right? They're trying to figure it out. They need advice. It's not a straightforward decision. They got some stuff they got to work through in their financial portfolio to be able to qualify. So there's some hair on that. Those are 2 different types of customers. So if you have we use a recommendation engine, and so the recommendation engine will basically say if we've got John and Ethan, those are our 2 loan officers, and multiply that times 50 or 20 or whatever it is. Right. But those are our 2 loan officers. I'm going to look back at your history, and I'm going to see that John's got, over the last 12 months, John's got 35 closed deals. And the model, the recommendation engine, is simply going to identify the characteristics, the common characteristics of all of those closes out of what he got. Let's say you got 1,000 leads, you closed 35, you got a 3.5% close rate. Then what it's going to do is now when that next customer comes in, whether that's that rate shopper, whether it's the person with some hair in it, whether it's a person in the Northeast with a smaller loan on a second home, whatever that profile is, that recommendation engine is going to run that new profile through and look back and define and find the patterns in what John's closed and say, hey, John is either a good fit for this prospect or not as good a fit relative to the rest of their teammate, relative to your team of 40 or so
Sure.
loan officers. So yeah, that's that pattern recognition, the ability to go back and look at a big spot of data and to be able to pull out that recommendation is exactly what we do. Similarly, if you're nurturing, say, 1,000 leads inside of a CRM, and you want to identify, okay, well, I only have time to call 500, and I want to send text to the other 500, or I want to send it to an AI agent, We'll build a recommendation engine that will tell you which of those records should be called, which of those records should be sent to an AI agent, which of those records should receive a text, which of those agents should be prioritized right now for your loan officer to make a follow-up call today, because those are the highest value records and you want to get in front of them. So yeah, there's tons of power in that data, and CRMs are really the ability. We don't have a CRM. We're the data layer. We're the predictive model layer that sits behind a CRM, marketing automation, a dialer, and we then give the values that then drive the behaviors of those systems.
Hey, John here. If you're anything like me, you like to get in, poke around, you like to check things out before you go diving in head deep. We've got a group where you can do that very thing. CEO1440 is a community. We post in there all the time. There's hundreds of different people, a lot of different conversations, and things that you may be able to take away and apply into your business. Now, the guarantee, I can't make you any guarantees. It's not going to 5X your business, but what it might do, it could 5X your business, probably will give you some things that you can tangibly take away and start applying in your business every single day. Everything we post may not be for you, but it definitely could be for you. So check it out. The group's free. Would love to see you in there. CEO1440.com. Enjoy the rest of the show. You're kind of like, I think of it in like coaching. You're like the Obi-Wan Kenobi, right? Like just sitting there looking at the Jedi and just telling them what to do, right? You're not like fixing the the X-Wings or the fighters or whatever they're called.
Yeah, you're the whisperer. You whisper. You're just whispering. You're whispering. That's a good way to think about it.
It's really it's a super interesting place today as I coach. You know, I do this thing where I bring people in for like a 12-week intensive, and one of the biggest things is identifying. You know, almost always, if somebody closes every deal they have has got a bunch of hair on it, like everything they do is bottom of the barrel, low FICO. It's not that that's the leads they're getting. That's the only ones that they actually convert well. And so often it's something in their process. Like your average loan amount often is not the leads. It's some little tweak inside of your process that determines that you've prioritized them in some way, shape, or form. Therefore, you're actually feeding your own crappy, low volume, low margin, hardworking loans.
Yeah.
And you have two people that are buying, like I have people buying leads both from the exact same place.
Yeah.
Right? The lead comes from the same place.
Yeah.
Their margins are about the same. Like they're set up with the same little widgets. They have the similar landing pages. And one writes $650,000 loans, you know, and it's $650. Then they make 1 point on it. They make $6,000. Like the other one's doing $260,000, 580 FICOs, you know, and they're making still the same 1 point because they were on a rate table and one's making a third the money for 2 times the work.
Yeah.
And it's a tweak in their process, not the leads. And they'll blame the leads or they'll blame, you know, whatever. They'll blame bank rate or wherever it's coming from. They
Yep.
A lot of blame being pointed, but nobody looks back and says, well, why is that happening? Here's why it's happening.
Yep.
Here's where the problem is. Here's how to fix it. And here's what. So I think it's really neat.
I think to your point, like you get what you prioritize, right? Like you get what you prioritize. I mean, in life, I mean, for all of us, you know, like if you prioritize exercise, you're going to be fit. If you prioritize travel, you're going to spend a lot of time traveling. If you prioritize time with your family, you're going to spend a lot of time at home. Like you get what you prioritize. That's just it's wonderful. But being deliberate about what you're prioritizing, that's the issue that we, and you struck on it. That's the issue that we initially were really trying to solve for lead buyers is the lack of like deliberate prioritization around what's coming in, and just saying, hey, look, I'm spending $350,000 with LendingTree, and I mean I should be converting at X, and what the heck's happening, right? Okay, like. That $350, great. You're spending that money. What are you doing with those leads? What's happening to those leads when they come in? If they're just coming in, they're going through the process. There might be some adjustments in your process, but if every single lead is being treated with the same exact process, you're setting yourself up to really struggle and not compete because the other leg or 2 legs or 3 legs of that lead are being purchased by shops that are deliberately prioritizing within that sales queue. They are executing, and they know, I know what this lead is. I know if it's good for us or not. I know who it should go to, and they're going to out execute you every time, just because that's, they've prioritized that, and that's what they're going to get.
Yeah, and I think as we move into more of an analytic type, like a predictive world with AI and stuff, that person that's got a PIW and a property inspection waiver doing a rate and term refi,
Yeah.
the person that can prioritize that and can move that up the funnel, and I don't think that there's any reason if you're doing a rate and term right, you meet this 4 little check boxes, that you probably couldn't at time of application be able to lock and schedule your closing as you're signing your disclosures.
Yeah.
I think it would be right. Like, I think that they would be able to execute that today at a 90% pull through rate.
Yeah.
Because I know at a 60 LTV in San Francisco, right? Like, I know where you live, what region of the country, predictive, what's going to get a PIW. I know that your DTI is going to fall in line. I know that your value is below $1 million because I can't get a PIW over. Like, I know the model. So right then up front, as you're filling out the information on the back end, my little AI bot's going, and it gets to the end, and I can say, hey, Ethan, you're eligible for our fast path. I can get you a 0.25% lower interest rate because I'm going to lock you for 21 days. We're going to go ahead and schedule closing right now. In order to execute this, I need all of your documents signed in the next, X number of minutes. And I think that companies will be able to just walk you right through, lock, schedule, title ordered instantly, homeowners, everything verified, submitted to underwriting, AU, like AI underwriting, and probably get conditional approval. You'll be waiting on the TRID timers, which completely blows my mind. And worked on a project a couple years ago trying to build that. And now I can do it with like a large language model, just talking to it.
Yeah.
Right. So it blows my mind. Do you see anything really cool out there? Like, I had some questions here for you. Anything really cool that you're seeing, or trends or things that that apply to the greater world, but also maybe the individual broker, the smaller guy, things that you would be leaning into right now if you were still on the origination side?
Well, I think for individual producers, something that's been invaluable for me, because I'm in sales, just as they are, and the call recordings, and we won't record this call, but I use Otter AI for all of my calls, and it records my Zoom videos, and what it does for me is it gives me a quick follow-up email, which a lot of people are doing. You can get a quick summary, and it helps you. You don't have to take notes, so that helps. But one of the things I've done that I do every month is I pull together all my call recordings from the previous month, and I upload them into Notebook LM. It's a big Google database, and I ask the coach. I have a sales coach, and the sales coach tells me relative to my last month, this month, what have I changed? What am I doing better? What's happened to my tone? Are there specific things? And typically, the LLMs, as anybody that uses them knows, they start out very nice, right? Very, very flattering. Oh, John, you're doing great. It's so nice that you uploaded your videos. That's a really smart thing to do, So, so as you train your LLM, it's you're looking for critiques and for ways to improve. And I think for the average independent broker, but any sales org, leveraging those conversations to the degree that you can is incredibly helpful. You'll just find nuggets. I found a ton of things. One of the things I obviously found is I talk too much. I mean, that's a problem. But you find a ton of things around intonation, around specific suggestions for ways that you can overcome objections more effectively. That's been a great, a super helpful tool for me.
Hey, if you're listening to this, quick reminder, we have a free group, CEO1440.com. Jump in there. Tons of posts, tons of information, a lot of stuff we're bringing day in, day out to help you do more with your 1,440 minutes every single day. CEO1440.com. Check it out. Yeah, I have a thing that rides on my computer. It's a little red dot. I press it. I can be on Zoom, anything, as long as it's through the audio on my computer. It works on an iPhone as well. But if I'm on a sales call, I can press that, however, and it begins recording in the back end. And this has been trained by myself and the company that did it, but it's my sales process. So it's listening to the call, and it might prompt me to ask you about the property. And what it's doing is it's completing a 1003 as we're on the call, and it's giving me suggestions that I trained it. So it overcomes objections like I do. You acknowledge, you respond, you pivot, and it walks through. And then here's where it gets super cool. And I do this with some of my clients that need like sales coaching. We install this on their thing, and they're just, every sales call is being recorded. It's constantly giving them critiques, but the second they hang up, boom, in your inbox is a 3.4 file with all of the clients, everything that you said. If you mentioned the job, like it would have ProPair already in there and the number of years calculated that you've been there based on what you said. You didn't even tell me a start date. It just does it. And it becomes a 3.4 file that I can now take and upload right to any of the things. So they literally have me in their ear on a screen. Here's the suggested text. And what their transcript is, it's transcribing in real time.
Yeah.
Or if you're on your iPhone and you make a call, say you're just driving around the golf course and you're talking to a client, you're like, yeah, I'll follow up the second you get off the phone, it shows up as an email with the transcript, all the bullet points that what you asked about on the 1003.
Yeah.
And the 3.4 file to put right into your thing.
Yeah.
So like I in theory could coach 100 people at a given time on all of their calls simultaneously. Like that's kind of mind blowing.
Yeah.
And I'm still making tweaks to where it will overcome objections even faster.
Yep.
But if I can build a bot with all my knowledge in there to do it, it's not far away from it actually just doing the talking for me.
Yeah.
And you don't even have to have the human, interface in there. But that's super cool. And if you you have a lot of clients, like there's a company I use for that they put this in, like they do, they've got tens of thousands of companies, they primarily in the call center space. That's super cool, right? Like you could have a company that could get my sales trained bot.
Yeah.
And it blows my mind.
One of the things, you just thinking about our conversation earlier, one of the things that certainly for smaller originators think about their pipeline and is we do a lot of work now with portfolio lenders and lenders who either buy a lot of leads or have a lot of customers. And so that's a large static database, but you have a lot of information on that database. So you can predict, okay, when are they going to pay off? When are they likely to pay off? Or when are they likely to go get their next loan? But the same thing I think stands for smaller brokers and individual producers is if you've got that database, you're accumulating that database, you can really start to pick up patterns, and you may need to supplement some third-party data, but you can start to pick up some patterns on when people will be in the market. It probably takes you, I don't think you can start today and get 30 days of data, but if you've got a CRM and you've been using that CRM for the last few years and you've got outcomes, so you've got some loans you've closed or you've got some folks that maybe didn't close with you or went and got a loan somewhere else, that's now your dependent variable. That's the thing you're training on. That's the outcome. And now you've got all of that historical data and their records, and you can train a model and effectively predict then in your portfolio of 100 old leads or 100 old prospects or 1,000, you can predict from 1 to 1,000 which ones of those are most likely to pay off or to get a new loan in the next 60 days. So that's something as a small broker that you can do today. If you're interested in doing that, we don't typically work with small data sets like that, but if anybody that's listening, you can reach out to me on LinkedIn and I'll give you a little guide for how you would go about doing that.
Yeah, and what so that's was on my thing here is predictive monitoring, trying to figure out when the client's going to do something before they have. So that's a really thing. But what is like the ideal, like what is a company that would traditionally reach out to you? Like kind of what's the small side of where people begin to kind of, one, they need to know that you exist. Two, they need to understand that it's probably something they need.
Yep.
What's kind of like the size where people start reaching out to you or maybe initial conversations?
Yeah, typically your marketing spend is 100,000 plus. That's kind of what we've learned is kind of the limit. So you got to be you've got to have enough marketing coming in where it's meaningful. And you've got to have some history as well. So if you're just starting out, it's going to be tough. You don't have enough data to train on. Typically, we're training on 6 months of historical data. But then
So
you've got. Go ahead.
So like $100K a month in marketing spend,
Yeah.
which is driving, like, depending on where they're getting leads, they're driving, thousands of leads, you're getting a lot of records. Then that's where, well, I don't have a ton of people that are doing that. There's probably some,
Yep.
but like the offer there of, something, and maybe even it's something, if you've got a breakdown of like, a little video, like here's the things that you would do.
Yeah, for sure.
Maybe I can even post it back. I've got a community I run.
Yeah.
I can post it back in there, do a little training on it for them. That would be awesome.
Yeah, I'd love to do that. Like I said, this isn't for smaller, but I'm happy to show you what I would do if I was an individual producer, an individual producer with CRM with 1,000 lead records, historical lead records. Here's what I would do to prioritize those historical lead records. I'll just do a little. I can do a little Loom video and share it with the. Happy to share that with the community.
That would be awesome. Because we all need to, regardless of where we're at in our game, right? Like it's taking the steps today to set yourself up, to win in the future.
Yeah. And
there's just a really big learning curve. Credit triggers are something I've seen you post about.
Yep.
And I'm not I don't even really care. Like I was there were some super people that did credit triggers.
Yeah.
Like they had great systems set up. I actually think that some people that didn't do them are going to get their butts kicked when these people start now coming after the traditional business, because they had dialers set up. They had analytics. They knew who to call, what to call, when to call. Like they were miles ahead from the tech standpoint.
Yep.
And, they're going to show up in your backyard where you've been just complaining about them calling your leads on occasion when you couldn't pre-screen opt them out. And they're going to be kicking some people's butts.
I've read your piece. I read that piece. I love that. I read that LinkedIn piece, and I have a customer who's a trigger customer, and we don't have many because we don't have. That's really the only one. They're transitioning away, obviously from triggers, and I shared that sentiment with them, and they are hard workers. They're committed. They've been grinding away. They're going to have to change marketing channel. That's going to be, they're going to be fine. They're going to be fine because they've been grinding it out in a very difficult channel. And the lessons you take away from that and the rigor and the structure and the discipline that you take away from doing that, they're going to be just fine. So they're now moving into buying lower cost leads. Eventually they're going to buy higher cost leads. They've got some other list marketing. There's some things they're going to be doing. They're going to do some direct mail. Those are, but anything they get into, it'll take a little while. It always takes a while. You got to give every channel, a few months and work out the kinks. But if you're paying attention to your numbers, which they do, you'll figure it out. These channels exist. They don't exist because there's not loans coming out of them. I mean, think about third-party lead buys. Third-party lead buys I've spent 15 years in that industry, and we used to get calls just like you said, like, hey, your leads suck. And then we'd get, hey, your leads are great, from like these are the same leads. So it is for the lead buyers and anybody who's spending any marketing dollars, you want to hold your lead buyer to account for sure. But it's your money going out. It's like you mentioned that you're putting $250,000 on a credit card. When you put that $250,000 on a credit card, you want to know where how that money's doing, how now internally, how your team is using those leads, because every single lead at that point counts. And that level of discipline and that level of accountability is a recipe for success. If you're just spending and just hoping for the best, it's going to be a struggle for sure. That's not a good form of third-party leads.
Hey, I want to get a quick message to you here about adding value. And our industry is terrible at telling you, do this, do that. So many people want to add value to you, but value is not in what I give. It's what you receive and whether it makes sense for you or not. We've got a community, CEO1440, where we post every single day, lots of things, sales scripts, a whole plethora of things. So I don't know what particular things are going to add value to you. They probably all won't, but definitely some of them will. The community is free. Would love for you to get in there, sniff around, poke around, and maybe there's more stuff we can do. But I know it starts because if you're anything like me, you like to get in there, check things out on your own before you go and sign up for some large commitment. So get in there, check out our group. I bet that there's something in there and there's little things that you can do that had you known 6 months ago, you'd be making more money today. Join the group. Look forward to seeing you in there. Have a great day and enjoy the rest of the show. Yeah, those, I know quite a few, and I've worked with companies that do credit triggers right on sales training stuff, and they're not slouches, right? They've been like, I equate it to, they've been farming in the desert. Right? They figured out how to get water there. They figured out how to, and you've got these other people that are sitting like on the most fertile ground in Idaho. And right, like if they don't have sun for 2 days, they get upset. And these guys have been out farming in the desert. And just when they show up in your market, like just watch out because they're savages and they found a way to, they're getting paid like a fraction of the amount. And it's not uncommon for them to make 300 dials a day. Yeah. Get told to F off 100 times. They just bang their head against, and like when they show up in your market in your backyard, like you didn't want them there. Yeah. You would much prefer, I would much have preferred just that hey, do you know what? You're not buying today. Let's do this. How about you and I do this? We're going to, before I pull your credit, I'm going to pre-screen opt you out of credit triggers. Otherwise you're going to get attacked by these savages. Yeah. Does that sound cool? Awesome. I'm going to send you a link. Do this. Don't let anyone pull your credit. Trust me, right? I do that with all my clients. Yeah. I never had credit triggers, right? I could just avoid it on 97% of them. So it wasn't a big deal. It was only the idiot that said, oh, let me pull your credit and get you the verified approval. Yeah. And then they get blown up with credit triggers because you triggered it yourself. Like I think of Happy Gilmore, that guy in the background going, jackass, right? Like when you do that, if your client got a credit trigger, you were the jackass. Yeah. So I don't know. I'll leave it at that. If your clients got credit triggers, for the most part, 80% of it was your own fault. They didn't have to do that. You did that to yourself. Same way you get pulled over for speeding, going 90 and a 70. Like it's not the cop's fault. You were going too fast. You didn't have to. Okay, enough of that tangent. Anything that you would do right now for people? A lot of people are worried about like Rocket Redfin, them buying Mr. Cooper, that they're going to go out and somehow or another cannibalize all of their servicing book. Anything that you would do, maybe I don't have a lot of complex analytics in place, things like that. I know there's a lot of companies that will just notify me, right? It doesn't cost me a lot to put monitoring on my own close clients. Is there anything you would do from that standpoint just to protect your existing book of business?
Yeah, I mean, I think the thing, just a lesson from my B2B sales and what I hear is I think you just want to personalize as much as you can. So if you've got existing borrowers from the last 12 months, I know it helps me, and I don't want to preach to anybody else. Everybody's got their practices. But the more that I know about the prospect and their situation before I call them, and the easier the conversation is, it's less friction, frankly, on the prospect. So yeah, research your prospect. It's not a volume game. I mean, it is. But it's not a volume game. I mean, each one of those prospects if you've got that database of those past borrowers, just treat that like a date with your significant other, right? Prepare for it, get ready, treat it well. Because you're right. I mean, they're significant. They're going to be hearing from certainly from Rocket and other servicers, but you're in the catbird seat, right? It's your deal it's your kind of deal to lose. You were the last originator. If it's a previous bar, you were the last originator. So just be prepared.
Yeah, and you said this earlier, but I'll kind of reiterate it again. What you focus on, you find. Right? So your close clients, some suggestions I would just make is make sure you're in their inbox with some kind of video or something that's like authentic you at least once a month. Like don't rely on your happy, Labor Day, happy 4th of July, like happy pumpkin spice, the Wednesday before Thanksgiving. Nobody cares about that. You actually probably hurt your chances of getting business doing that. So just some pointers that I would have is have something like that. Provide them with things like where the market's at, maybe a payment calculator that you send to them so they could see what it looks like. Give them things that they would actually use. So just always run the litmus test. If you weren't you, would you do business with you based on the thing that you just sent them? And a lot of times we send out crap for the sake of sending something out. So if you want to compete with Rocket, be what they can. They're going to beat you in the analytics. They're going to beat you in that they can show up on their payment coupon. Like you can't do that for most of us. So beat them where they can't by being an authentic, real human being, sharing real, human stuff. So I think that's all great things. What are your thoughts on like the Rocket, Redfin, Mr. Cooper, Rocket Money, the whole, right? They bought Lower My Bills, Not Bills, right? Their whole ecosystem that they're building to capture you from, essentially Rocket Money is trying to get kids right out of college.
Yep.
Right? To like start monitoring your credit, and they'll stay with you all the way through, your collection of Social Security and death. What are your thoughts kind of on that? What are you hearing from other companies? Like, I kudos to them, right?
Yeah.
Like they're building a better mousetrap, but
yeah, for sure.
What are your thoughts there?
I'll riff a little bit. I mean, I love Rocket. You're an old Quicken alum. They were a client for years, and Dan Gilbert introduced me to the ISMs, and every time I'd fly out there, 4 times a year to go visit them as a client, and I always brought back a new book of ISMs. And I think just that organization, I think gets a lot of attention. For me, it's just very positive. It's an inspiring organization within our community that I don't know their leadership now, but I do remember sitting with Jay Farner when we were first running bills, and we came out and they were spending a lot of money with us, and he sat at a conference room across from me, and he said, "I just want to put you out of business." And I was like, "Whoa, it's not much of a partnership." And he explained his rationale. He's like, "Look, the relationship that you're intermediating for me with my borrower, I want to be there." And so they continue to do that. I think that is exactly, if I was in his shoes, I would want to do the same thing, and I think it makes a lot of sense. Now, that said, lead providers, third-party marketing partners, that's just there's always going to be a space for them. I think certainly like the lending trees of the world, the Suda connectors, the big lead providers, the big lead sources, would benefit from being thoughtful about what the Nerd Wallets and the Credit Karmas and the Zillows, the assets they have, and try to spend a little more time, this is unsolicited advice, try to spend a little more time on product and facilitating the matchmaking between the prospects and their potential lenders. I think that's always been a gap and has never killed those businesses, but is an opportunity for sure. And people trust Zillow, people trust NerdWallet, people trust Credit Karma because in many cases they've already given them their data. They're a concierge type service. There's a company called OwnUp that does a great job. They power Realtor.com, and they do a really nice job of handing off prospects in to lenders. And giving that more attention and giving that more focus, I think is just one of those areas that everyone's going to win. You're not going to diminish anything if you improve that part of the process, because right now prospects, if they go to a lending tree, or if they go, they tend to feel overwhelmed, and I think that the burden to some degree is on lead providers to create a better experience there, and I think they can do it, and I think they will, but that would be
if you want leads now, right? So a broker, somebody you can build a personal brand, do your own thing, which takes time and is slow grind. And a lot of times you've got to augment with that. I need leads now, right? And go to Facebook. And there is, massive difference between people that work with a lot of those different lead providers, what that handoff looks like, what the landing page is, where they go, what the experience. We run some plays on our end, pretty specific, because we're small brokers for the most part. Like, how do I resonate with that client different than everyone else? Right. I had somebody on that said, and it really has stuck with me, is that different is better than better. For the most part.
Yep.
Right? Better is an improvement offer. Better than what? Better than who? But if I can just be different, then I put myself in the same bucket. So
Yeah.
we always try and how can I separate myself and be different? If I'm trying to be better, then I got to be better at dancing on TikTok, and I can't dance.
Well, and I always think, like it's kind of interesting. But just a little bit of a tangent here for me because this is this goes back. The best source of business if you're an originator is a referral. I mean, it's
100%.
It's great. Everybody's happy. Everybody wins. You've been trusted. The person that referred you is happy to refer the person to you. You're happy because you got them. The person's happy to have somebody they know. Like the lending tree is effectively doing a referral, but they're just not doing a good enough job of it, right? Like you have the opportunity. That person has come to you and said, hey, look, like Lending Tree, I trust you to give me a good lender or a few good lenders, 4 good lenders. Make me some nice referrals and I'll talk to those people. And like, that's the part of I think there's such an opportunity there because the referrals are great. Everybody wins with a referral. So they've got a person on their website that's like engaged in the process. Make a nice referral. Make it a nice referral. Everybody's gonna the overall global close rate is gonna increase dramatically if it's hey, here's this lender is the lender for here's why we think this lender is good for you. Here's why we think this lender. And I don't mean just bullet points on a screen or on a thank you email. I mean, really putting some thoughtful effort into it. Look, right now technology is. I mean, I'm sure everybody can feel it. It is. We are going through a massive change right now. The capabilities that we have in our businesses is transforming every single day. I'm coding up web pages, man. I mean, I can pretty much do anything, right? Like really. I mean, you can pretty much do anything. So your imagination becomes your limitation. Your imagination and then your ability to work because just because you can do it doesn't mean it's going to be good and doesn't mean it's going to be easy, right? Like if you can build on this technology, if you can leverage the tools that are out there. I use a service called Lovable, which is like the super dummies, approach to coding. Yeah. So I got to work my way up the scale, but I'm in the natural language prompts. But now you recognize, okay, you can start to think through problems. Now, what do I really want to solve? Why do I want to solve it? What's going to be unique about me solving this? Like, why does it matter? Who is somebody else going to care? Do I just think it's cool? So, the same type of thing. If I'm an individual broker and I'm out on Lending Tree, hey man, like you just got a lead from Lending Tree. You can create a little app that effectively you can send it to that customer. You can give them an immediate application. I know there's a lot of services that do this. But think about the services you're doing today and think about how you can customize that experience to, like you said, just be unique. Like just create that environment where you're not just another name where they're going to be bugged and they see your phone number. It's now, hey, this is something a little bit unique. And so the creativity piece is the challenge, and it's the stuff that with my business, we're spending a lot of time on right now is how can you creatively explore and use all the technology you have to deliver something that's very unique, that provides tremendous value to your customers and the people you serve. And now's the time to do it. I'm like 6 months from now is not the time to do it. Now is the time to do it.
I agree with the now being the time for sure, because once rates start getting cut, right, you're going to be trying to fix stuff with the wheels moving on the bus. Yep. And one of the biggest things that I see right now, again, I talk with my coaching clients about a ton, is predation of your leads, right? So let's say you get that lead from Lending Tree. You go through, you make that initial contact. There are some very wily predators out there. You think, oh, Wile E. Coyote. Like the Wile E. Coyote it's probably Zillow, right? Because they're the ones you're searching for a property. And if you don't have a mechanism to show your client properties, they keep pinging Zillow. Soon enough, they're going to click that Zillow's estimate. They're going to get the Zillow's whatever and they're going to get a Zillow. And next thing you know, they're talking to a Zillow agent.
That's a good point.
And they've wooed you away.
It's like your triggers dynamic. It's like if you don't take them off get them off the triggers. Same thing. Get them off the search. Pull them into your ecosystem.
You got to you have to think about putting moats
Yeah.
Like,
I like that.
you got to think about putting a moat around every area of your business, and it can be an app, it can be a widget, it can be a tool, it can be because you communicate at such a high level.
Yep.
But you've got to do stuff to separate yourself to be different. Because if you leave them to their own devices, like Zillow a couple years ago closed zero. Like they'll probably do 10 billion this year.
Yeah.
So 0 to 10 billion lands them like they're a top 10 lender.
Yeah.
And right, where are they getting it? They're eating little incremental pieces. They're just chopping away.
Yeah, smart. Yep.
And so figure out what leads are important, when to call, what to do. But then once you get them and you've pre-approved them, like a lot of lenders see the pre-approval as the crescendo.
Yep.
Like they spend so much time getting you pre-approved and then they send you off to La La Land and never call you, or you're scheduled for a call every other Friday that never happens.
Yeah.
And then they want to know why my pre-approvals don't convert. I'm like, no shit, you don't call them. Like you do, there's no reason for them to convert. You're a terrible husband to your wife. That's why she left you. Right? So like, again, same scenario there, but you see it, like you're looking at lead data, so you can see like right where the fall off is. Yeah, of course that happens, right? Because here's why. So I think it's super interesting. We've been going for a while here. If you were to today step back, everything happened. The only job for you to do is to start a brokerage and begin originating loans.
Yeah. Yeah.
Lead buy's gone, like all your stuff, like you got all your knowledge, but you got to start at ground one. You got like 5 grants, you got limited assets.
Yeah.
Where do you start? What's the first couple of things you do like to get up and running?
I love this question. See, this takes me back to my to the Florida mortgage educator, and you can always make money. And believe it or not, I think about this stuff like every 6 months. It's like my this is my escape pod, right? Like you're like, oh man, if things go sideways. So I think the first thing I would do is I would keep it super simple. And I you made a good point earlier about Bill Emerson's advice, where the things you don't do early come back to haunt you, and the things you do early. And the thing that I've found to be successful for us and for our most successful clients is just to make some decisions around systems really early, and not mess around, and not be grass is always greener. Choose a system, make that determination, but then just start your process. And if it's me, I'm going to choose a CRM. I'm going to choose a CRM, and I'm going to choose a CRM for me personally. There's one I have in mind that I really like. They're good friends of ours. The reason I like them is because, one, they design good software, but two, I know they'll stay up with AI. Has a very real risk of wiping out a lot of SaaS companies. I know that they're positioned to stay ahead of that and to provide me an experience. I don't want to be in a website. Like I'm not in a year, I'm not going to want to be in a website. I won't be on my phone, or if I'm running a business, I don't want to have to log into multiple websites. My AI agents will do things for me with natural language prompts. That's my world. I'm not on a friggin' keyboard. I'm using natural language prompts to execute actions. So I want to choose a CRM that's going to be able to execute that, still store all my data. What really matters is the data. And then, man, I'm going out and if it's me, now this is just totally me. I'm putting a billboard at my local high school. I'm talking to all my local friends. I'm working totally locally. I'm going to talk to a couple of real estate agents, which may or may not have the time of day for me. They got their folks. But I'm going to start just within my own network, and I'm going to start putting the word out that, hey, if you need help and advice on a mortgage, I'm here for you. I'm going to start publishing some content. I'll share a newsletter. I'll just go super local and grow from there. That would be my personal approach.
Got it. I like it. And like anything, it would work, right? Local,
I just have to
viral.
stay with it. Yeah, you just got to keep working. I mean, it's not like it's not going to fall from the trees, right? I'll have to wake up every single morning and execute all day, and that's the business.
Yeah.
So
if you plan out your day, right, you set aside the time to actually go and do it, it will work.
Yep.
So one last question here: what's the CRM?
But in the meantime, I'd much rather do software. I like software a lot more.
Yeah. No, I do the exact same thing, right? I always could see myself like in my 60s, just originating just for fun. I really enjoy it.
Yeah.
When you do it because you like it, not necessarily like it's fun to do when you like it, not because you have
Gratifying.
to.
You make a little bit of money. You have a nice relationship.
Yeah.
People.
So what's the CRM? You can't give that strong of an endorsement without saying who it is.
It's a company called Relcu, RELCU.
Okay.
Yep.
Now I know Tripp and all the guys over there. I've used Relcu.
Yep.
For lead gen, I would probably go out like lead management. They are definitely awesome.
Yep.
Hard. They don't take individual onesie twosie loan officers. You got to like kind of be big.
They will. They'll go where the market is. They will. I mean, that's I think that's what I mean. You want Velocify has been the gold standard in mortgage for so long, and they deliberately have not evolved. And so but you look at platforms that evolve features, evolve channels. I think that's who you want to bet on. So
Relcu is, if you're in the big time lead buy space, I can't think of a better company than that. There's a lot of things that sit on go high level. If you're just like trying to generate a small little business that does awesome, super cool stuff.
Shape is nice for that too. So for smaller shops.
Yeah. This has been great. So anybody that's still here listening, one, we thank you. Secondly, if you have any questions for Ethan about, inside of the lead space, I reach out to him, when I have questions about, leads, anything lead related, just a wealth of knowledge, super open, great guy. So reach out. We'll put some notes someplace in here for you to, his contact info. He's pretty active on LinkedIn. And if anybody has questions for myself, reach out. If you want to help get your poop in a group and you're a mortgage broker just trying to figure out, what's my next step? What do I need to do? What levers should I be pulling? Reach out. I'd love to have a conversation. You don't have to buy anything. Might try and sell you something, but who knows? It's what I do. I can help. Ethan can help. We appreciate you being here. So thank you all. Have a fantastic day, and hopefully you enjoyed the show. Like, subscribe, do those things.
Thanks, John.